Today's Wednesday, February 8th, 2023, back for another daily review. Tonight I'm going to talk about two different trades, one an opening range setup, and then a scenario 3 continuation trade that we saw, liquidity grab setup in the afternoon. Coming out of Asia, we've just been, again, another sideways Asia session and sideways London session pretty much as well. So at the time I got to the chart a few minutes before New York Stock Exchange opened, I did see right off the bat that we had this, we had a liquidity grab here prior to 9:30. And we then had also, following that liquidity grab, there was SMT divergence where I can show you here. Here we go. So NASDAQ here, the same time, made this higher high. S&P made this lower high. They both began to break down. So I was very keen to short this market, even though this is one of the kind of points I want to remember from today, was because sometimes you just look at a daily candle. I don't know why it seemed, but sometimes you just look at a daily candle like yesterday on just the daily chart and you think, okay, that's a really bullish sign. We've come down here, we've hit this volume imbalance, very strong push up. And then you wonder why the next day looks like this at the end of the day. And I think it's important to just remember and document, and for the notebook, is just how did this daily candle form, and what happened in the aftermath, in the session afterwards. Because, this wasn't like a classic up day where we have an Asia range and then we have a Judas at the beginning of London and then a London expansion, New York retracement, and then continuation in New York closing near the high. This was different. This was waiting for news all day, and then Powell speaks, the market shoots up, traps everyone knocks everyone out who is short, lures in new longs on big excitement spike here, then takes all those longs out here. And then when price is all the way down here, this looks like, okay, now it's the time to short. And then people who short then get immediately taken out again. So it's really clearing the deck on both sides. So, it's one thing, like for instance, yesterday when we were trading up here, I thought that, hey, if this takes this high, there's a chance that this really, rallies strong into the close, had these highs here, which is why I kept a runner until it broke back into this range. So for me, if it was really going to just be bullish off of this area, it should have just kind of continued into the next session. And so when we just got a, basically just a run above this high and no real momentum came in, it's almost like, see it as like the opposite of this. So it's just running the low, running the high. And then we see a breakdown at the beginning of the day pre-New York. And so I was open to taking this short based on what I was seeing on the higher time frame, despite the daily candle, even though the daily candle, when I first looked at it and I wrote down in my notebook, daily candle looks good, daily chart looks good. We might put in a low somewhere to go higher. But when you really dissect it, and like you can just look at it, like I was even saying to myself, like when price was up here, I was like, yeah, if I was going to long somewhere on like a pullback, like based on the hourly time frame, like this just looks like there's nothing here to long from. I mean, maybe below these lows, but like inside here, there's just like nothing that looks like a level for me to want to buy from based on the hourly. And usually I like to see something on the hourly that supports buying. So anyway, we have all this, then it just like, we have all this inefficiency here, and you can see the opening range setup produced a move that basically led to filling in this gap. At the time of New York Open, first move is down, but we know we have this displacement, which that's a type 1. So a pre-New York liquidity grab with divergence, then we get the displacement below on both charts, And then it's all about where do we enter after the open. So we have this optimal trade entry area, and we had this one. Now, depending on where you drew if you drew it from here or here, you have this. So I would love to be able to sit here and say, I, without hesitation, took NASDAQ and shorted it and had a great opening range trade. But in fact, I actually took S&P. I was fortunate, though, in that I was able to avoid a full 1% loss. So I only risked 1%, but I was fortunately, so here's, okay. I'm not ashamed to, I'm not here to show off, that if you want someone that's just going to show off all the time and they're great trades and how they did it perfectly all the time, there's plenty of places on YouTube and Twitter to find that. But anyway, I had noticed that, where are we going here? Gray. Okay, so where are we? Time New York Open. Right. We hadn't quite broke. So there's this 1 hour fair value gap. It's not impressive, but I did see that we were trading in it at the time of New York Open, whereas S&P, I believe, didn't have, were we below it? I think that was exactly, we were below the fair value gap on S&P, and we were inside the 1 hour fair value gap on NASDAQ. So that was why I leaned towards S&P. Even though they both looked pretty good to me. But I went with that. But I should have just done a check as well, though, of the relative strength off the high. So if you go to what was the good that came out of this? Let's start with that, because I don't want everything to be like complaining either. It's not what this is about. Shit happens. You're not going to be perfect. So on the 5 minute, my entry it was actually this. So I saw that we had this volume imbalance I should make that clear. We had this volume imbalance right here. And so I had just below that. And, oh God. So the first warning sign was once I saw that S&P had come up and triggered me into the trade, and I saw that NASDAQ wasn't anywhere close. NASDAQ was only like right around here. I was like, this doesn't, because if NASDAQ just goes up a little bit more into like the premium areas, then S&P is probably going to go up even higher. So that was the first red flag for me. The second red flag, which made me realize I didn't want to be in this trade, is when this candle closed above this 5 minute fair value gap. So once that happened, if you can look at the opening of the next candle, when we wick down and like basically once it came very close to the fair value gap right here, I just cut it. So it was like so my entry was just below this volume imbalance, and price had come to, so it was like a pretty negligible loss. I'm conflicted, because sometimes I just want to have the approach of like, I'm not going to touch the trade once I'm in it. You've seen other examples where I've done that and it's worked against me. So I don't know how to feel about it. Like on one hand, I'm like, I read price action well here and I got out of it and I saved myself a loss, like a full % loss. So that's always good. But it's not necessarily the best habit to cut trades once you're in them, just because you're in a little drawdown. But I did feel like the logic was sound because of, we always know one can come to your entry and one can go past it. So we know that was a possibility. And then it was I just didn't think it should have gone beyond this fair value gap. And if NASDAQ had also come up at around the same time, if they both had come up at around the same time, I probably would have felt like staying in. But because this hadn't come up yet, and it looked like it could still so easily come up a little bit more, and that was going to drive, S&P likely up as well. So that was the big factor there. So now the lesson two lessons from this. Number one, so I talked about this in the video, the opening range video, a way to determine strength. So if we take the highest high, since we're looking at selling here, the highest high after midnight, and we draw it down to our opening price, you can see that S&P dropped 0.61% and NASDAQ dropped about 0.74% off the high. So to me, that's like the scales of these charts are not doing a good job, but you can see on a percentage basis, NASDAQ had a stronger drop. So to me, that's another contributing factor to be able to read this as NASDAQ is the weaker of the two. You know, again, as I talked about in the video, sometimes the one that does the liquidity grab is the one you want to take. Sometimes it's not. And so that's just part of it. Now, the other lesson is notice how a type 1 can become a type 2. So we talked about how it was a type 1. But if you look at the move later in the opening range session here, we have this liquidity grab right there. So we have a divergence, lower high, higher high. I know some people messaged me about this, so it's cool to see. Then you look for your low time frame setup, and I think you could have entered on this gap combined with this whole up move right here as a breaker with this nice fair value gap here. So that could have been the entry. Now I didn't take it because I didn't want to rush back in. I was like kind of annoyed that I didn't get NASDAQ. The good news is that when we go back to, let's go back to ES, and we can see this was our opening range. We get this clear breakdown afterwards. So then I just was saying, okay, we're likely to fill this in or a portion of it in. I drew out that swing high, and it was just very simple. It was just waiting for it to trade back into it. First, I was looking for a lower time frame confirmation at the first touch of it, but I did not see a setup here in this area. But you can see clearly we got the breakdown there, optimal trade entry. So it was a break of the low, come all the way back up, take up this high, produce a new gap to the downside. And so that was it. So I had it like that above the body, and my target was ultimately this gap down here, but I partialed at this low here, and then so I took like 60% off my trade there, and I took like 30% off here, and I left the remaining 10%, and then it came back up and took me out right around here was where I got out of the trade. So all in all, it was a positive day, but it was just a small win comparatively to what could have been had if I had taken this trade. Now, not to say I would have held this. It's very easy to say that now in hindsight, but there's a chance that I would have just, even if I was in NASDAQ, that I would have just taken the low-hanging fruit here to this low. But anyway, that's it for today. That was what happened. That's the good and the bad. So that's it for tonight. Hope everyone's doing well, and we'll talk again soon.